Good morning, everyone. Welcome. This is the first time we are doing a morning stream, at least morning for me in Singapore. All right, so let me just get the stream set up properly. Now, today we are going to be talking about Lululemon. I think one of the things that I like about investing in these kind of companies is that you try and find opportunities where the market tells you that there is none. Just give me a minute. Now, I believe usually when I talk about these kind of retail companies, the traction is not as much when it comes to YouTube. But at the same time, I believe that, Lululemon is a stock that has been quite interesting to me for a while. I think previously when I was doing the streams about covering 10 stocks in 10 days, a lot of people asked me about Nike, a lot of people asked me about ONS, but actually nobody asked me about Lululemon. And I thought, what was interesting is that gave me an opportunity to compare Lululemon to some of its peers. And what I'll be doing in this video particularly is to take you through some of the comparisons, some of the things that I'm concerned about when it comes to Lululemon as well. So I think the main thing over here is that what I'm going to be doing with these Singapore morning time streams or US evening streams is that I'm going to take you through my research process. It's not going to be as put together as some of the previous live streams where I've mostly pre-prepared all the materials and things that I want to talk about. A lot of this is going to be, I might have the tabs already up and things like that and have a general idea of where I'm going with this, but it's to give you an idea of how I look at the company and the thought process. So basically today we aim to do a couple of things. We want to understand firstly why Lululemon has fallen so significantly since, basically since 2025. And then we also want to talk about, some of the expectations for the company going forward. And I have three reasons, at least to me, that seems pretty compelling about why, this company might be a pretty decent opportunity if you believe what the CEO actually says. So before we begin, I just want to, just last night before I was sleeping, I was looking through X. And with that, I just wanted to share some things with you before we begin. So I think when you, where is it? I think when you invest in companies like Lululemon, I think you have to be aware of how they are being affected by the economy, right? And so if you take a look at some of the data around the economy in the US recently, I think one of the main talking points in the US recently is a lot of the jobs revisions and how, that there's a huge revisions to the downside for many of these jobs numbers. And so yesterday, let me see, there was one chart particularly that, I think this was the one. Okay, so you can see over here, the shocking stat that was posted yesterday is that for the first time since the 2020 pandemic lockdowns, there are more unemployed people than job openings in the US. So in July, the US had 7.18 million job openings for 7.24 million unemployed workers. So it's things like this in the economy that that has gotten people worried. And I think being a company in the retail space, this is something that is just going to be an inherent concern for people, and you just have to understand that this is part of the market cycles. So as if we do get higher unemployment, if we do get more layoffs, then I think we are going to be able to see we are going to start to see these trends actually play out in the retail space actually. What do I think of Grab? Well, I think Grab is a fantastic company. I mean, I'm a shareholder of Grab, and I'll be talking more about them on Friday morning, same time. All right, I'll be talking more about them on Friday morning, same time. So the reason, like I said, why I'm starting with this is because to understand Lululemon, you have to understand what what part of the reasons that has caused the slowdowns. So you can see the US Labor Department just revised jobs by negative 911,000 out of the last 12 months. So this is above 2009 levels, with basically jobs data overstated by around 76,000 per month. And then basically, I think with all of these, I think ever since Trump fired the BLS chief, I believe, I think uh, it's also regarding these jobs data, and there's a lot of discrepancy between the revisions and the actual numbers, and I think there's a lot of debate ongoing on whether or not it's actually okay to have such a big discrepancy, because you then cannot make proper decisions based on the data. I think everybody have their own perspective regarding this, and I think at the end of the day, the most important thing to me is that as an investor, you have to understand how these market dynamics actually play out into the companies that you invest in. And as an investor looking at Lululemon, you have to understand that if we do see a slowdown, if people are losing their jobs, Lululemon, the good thing about Lululemon is that it has positioned itself in the premium end of the sportswear arena. Lululemon is a clothing company. What's so special about them? I think that is precisely the sentiment that a lot of people have towards Lululemon, and I think the sentiment towards Lululemon in the US is quite different from in Asia, and I think it's not that there's anything special. To me, this is more of a turnaround play where I feel like it has been underappreciated in some segments, and then it has been oversold. So, which I'm going to show you later on. Right. So, to me, this is another. You can see over here. This is another thing that is happening in the economy that I feel like we need to think about. China's exports shift to non-US markets. You can see China's exports to the US fell 16% year over year, and just 33% just in August alone. Now, why is this concerning? Because a lot of the times in the past, people have talked about the fact that, because we are importing from China, from the US, we are basically importing their deflation into the US. Now, with less of that, does that mean that inflation will take a longer time to go down? And then with the jobs numbers that are coming in as weak as they are, this could cause a lot of economic uncertainty with continuing inflation, whereas with at the same time, you're starting to see jobs numbers take a hit. So because of this, this may cause a weaker consumer going forward, and that is the context that we need to understand Lululemon, right? So with that, I just want to get into what I've been looking at regarding Lululemon. So welcome to the 7 people over here. Today, basically, like I said, it's going to be slightly different from what I've done previously. Now, in previous live streams, what I've really done is that I've tried to talk about the companies in a pre-prepared way. Today, I'm just going to take you through my research. Now, I've read through some of the things, but I haven't gone through every single article. So the first thing I like to do when I look at a company is to pull up its 10K or its most recent earnings report. So for Lululemon, basically, I'm going to take a look over here. This basically is their recent 10Q. So you can see in terms of their assets on hand, they have about 1.1 billion cash on hands. And then in terms of their inventories, they have $1.7 billion worth of inventories. Now, this is an increase from a year ago. And this increase is actually faster than their increase in revenue. So because of that, this is actually something concerning. So later on, when I'm taking you through the valuation process, you're going to see how we account for this in the valuation process. And then at the same time, when you take a look at the liabilities, they do not have any liabilities over here. So, no liabilities. They do not have any long-term debt over here. So this is something that is good to see that, they're actually quite well capitalized. Okay. Then moving on, you're going to see revenue over here. This is where you can see year over year, there was only a 7% growth in revenue. However, their gross profit margin still remains strong in the high 50s, close to 60s. And I think when I was doing my research into other companies like Ons and Nike, I think what you realize is that Lululemon, because of their positioning in the sportswear arena, they are able to maintain their margins a lot better than some of their competitors, right? In the midst of all these tariff pressures, I think they only see a 80 basis point hit to their margin. So this is actually not too, and I think this is something that is discounted or overly discounted for Lululemon. So I do believe the fact that they are targeting a premium market is actually a moat for the company going forward. And then you can see from here, income from operations $523 million, and then net income of $370 million, right? So this gives you a EPS of around $3.10. Now later you'll see me put all this together in the valuation. Now moving on from here, I just want to take a look at management's commentaries around some of the results so far. Now in the past, what I would have to do, I'm not too sure if you know about this. Just give me a minute. All right. So in the past, before the advent of AI, when you were doing research on companies, what you would have to do is that you have to download the transcript and then you manually type Control F and then you look for words like margin or compression or slowdown, and then you look at the management's commentaries around such events. Now over here, what I've done is that I've used Fiscal AI, downloaded all of the transcript, and then after that you can actually put it into Notebook LM. I'm not too sure how many of you know Notebook LM. Notebook LM, basically developed by Google. You can put all your PDF over there. Then you ask it questions. It will give you the answer by referencing the PDFs over here, right? So later on, I'll take you through how I did that. And then you can see from there on how we built that valuation model. But I think it's important to just take a look at how the CEO, what's his name? Oh, I actually forgot. Kelvin McDonald. I know he's looking at this. Yeah, Kelvin McDonald. Okay. So let's take a look at investor relations. This is basically the most recent transcript. Okay. So at the start of the most recent earnings call, Kelvin McDonald said that, while we continue to see positive momentum, okay, let's start from here. As you have seen, I was blocking myself. All right. So in their most recent earnings call, the CEO of Lululemon, Kelvin McDonald, told us that in EPS this current quarter exceeded their expectations. However, revenue fell short of their overall guidance. Now, on top of this, they have also guided for lower revenue and earnings expectations for the year. And this is exactly why the stock fell from $200 per share all the way down to the 160s. So I think those of you who have followed the for some time, you know that I have $190 cash secured puts on Lululemon, basically expiring on 19th of September, next Friday. So I expect these to actually get assigned, and then I'll try and roll myself out of this position eventually. So over here, he addresses some of the concerns that people have. While we continue to see positive momentum overall in our international regions, we are not happy with the current results in the US business. Lululemon has been in a period of hypergrowth for several years, more than tripling our revenue in just 6 years. Now, we have successfully managed through a number of market shifts, and they're saying that they're facing another shift today. So they're trying to give investors that sense of confidence, like, you know what, this is not something new to us. We have seen this before. We know how to navigate through this. And I think the main reasons that they give that cause a lot of this uncertainty in terms of the consumers' purchasing behavior has been related to tariffs, and then that has basically increased basically some of the friction of consumers going to their stores. Now, another thing that they have said over here. Let me see. Let me see. So specifically, I will share my insights. Business. All right. So after this, over here, later on, you're going to see what he says. He says specifically, I will share my insights on the state of the US business, our assessment of the current product offering, which, hint, it's not that good, and what we have learned works, what we have learned doesn't work. Now, I have to say, I am a first-time consumer of Lululemon recently. And I mean, if I'm just asking myself based on the material that they use, definitely one of the most comfortable ones I have ever worn. Um, Price point, I think it's at least in Singapore, we can have other brands that are equally competitive at slightly lower price points, also in the premium area. So because of that, it becomes a little bit hard for me to justify the extra, perhaps 20% or 30% going to Lululemon. That is me personally, but I do think their product is good. Now, the one thing I have to say, which they do address, is their choice of colors sometimes can be a little bit weird, I feel. Okay, it's not a typical color. I think it goes well with their brand, but I don't know. If you are trying to attract a bigger audience, I'm not too sure whether these colors are. I mean, some of you who use Lululemon in the comments, you can feel free to let me know I'm wrong, but I feel their colors are not colors I would wear generally. Some of them. So, okay. So last year they were also trying to drive growth and bring newness back to the category, which means they wanted to launch more new products. Now, later on, you're going to see that they actually give us specific numbers of what we can look out for to how much new products that they plan to release in 2026. Okay, so they achieved this, introducing newness back to the category through a combination of new styles and an increase in seasonal colors within core styles. Like I said, their seasonal colors sometimes can be not the typical colors that people wear. So because of that, at least for me, that has put me off buying some of their clothes previously. So while the guest is responding well to many of our new styles, they are not reacting as we anticipated to the updated seasonal colors that we brought into our core assortment. So at least for me, the reason why I feel the colors are a little bit weird, this is very, very anecdotal, but to me, why I feel the colors are a little bit weird is because it's very light colors. And yeah, I don't know. At least for me, I'm not going to wear a light yellow shirt to the gym anytime soon. Nothing to do with the color. It's just, yeah, I just feel like I don't want to sweat in the light yellow shirt and things like that. So to me, I feel like their seasonal colors can have better choices. Okay. So anyway, given this, we have recently conducted a deeper product diagnostic, the results of which I will share with you today. And we have let our product's life cycle run too long with many of our core categories, particularly in lounge and social. So like I said, I've never really bought any of their sportswear until recently. Two lounge, I would say lounge kind of pants where I wear for travel, and two running shorts. So the running shorts, like I said, when you go there, they have a bunch of different colors, like blue and stuff like that. Not your typical colors that people tend to wear. I think people tend to like to have more neutral colors. So at the end of the day, the ones that were most on the shelf were the light blue color pants. The khaki color pants and the black color pants were, more or less sold out. So I think this is what he's saying by, some of their seasonal colors customers haven't really taken to. So I've actually seen that for myself, and then to actually hear it in this earnings call is really a confirmation of what has been happening, right? So overall, premium athletic wear in the US remains challenging, with declines continuing in Q2. Consumers are spending less on apparel, spending less in performance active wear, and being more selective in their purchase. So this again ties hand in hand with the weaker economy data that is coming in. I think in the past, we have always thought that the US economy was doing well because of the jobs numbers that are coming in. But with all these revisions, we're actually seeing that, hey, perhaps it's not as well as what some of us expected. And so because of that, it is natural that we start to see the consumer behavior start to shift. They may be a little bit more price sensitive, right? And so because of this is the context that you have to understand Lululemon. Lululemon is marketing to a group of people in their premium sportswear space. And then on top of that, they have actually been a little bit lacking in terms of their innovation, in terms of their design, in terms of understanding what the customer wants. So in terms of their new styles, the clothes that they have, like I said, some of the things I buy, I really like the material that they use. I really like the quality of the product. However, the CEO himself said the colors that they have chosen basically to roll out in this new season is something that the consumers haven't really taken to, and I can attest to that myself, because when I go in, I've seen some colors that are really not colors that generally people would wear. My feeling, you can correct me if I'm wrong, but I think generally the idea is that when people exercise, they like to wear more neutral colors, and the colors here tend to be more bright and cheery and things like that. Okay, so I mean, I personally do not want to be sweating in a light blue or light yellow shirt, right? Yeah. So because of that, I think this has caused what is one of the reasons that have caused the slowdown. And then you think about the consumer on top of that, and then you add on the tariffs. It is natural that a lot of this slowdown is actually seen in the US region, right? So with that, let me take you through the results. Where is it? Okay, so this is, I'm taking you to the 10Q over here. So once I understand the context of the business, right, I'm going to take you through the 10Q, and then later on, I'm going to show you one of the key growth drivers for the company going forward, but the inherent risk that growth driver poses. So let me see, where is it? Okay, so over here, let me zoom it in for you. I'm not sure if you can see. You're able to see the breakdown in terms of where their revenue comes from. Now, you can see just in the United States alone, this number actually decreased. This was 1.42 billion, drops to 1.415 billion. Canada, slight improvement, only slight. You can say it's basically the same. And then the majority of the growth comes from Mexico, which basically there were no sales in 2024. So you can see this 1% increase in the Americas region is not in the United States. It's actually because of Mexico. Hi, Raymond. Yeah, so today we're at the moment right now, we are covering Lululemon. For those who are just popping into the stream, slightly different format from what we're doing usually in the past. I've done this a bit more prepared. Today, I'm actually taking you through my thought process. I haven't really looked at some of these data. I'm looking at it for the first time myself. I have pasted some of these data into a valuation table, which we will explore later on. But besides that, I haven't really looked at it. So to me, when I'm looking at this particular set of data, the way I'm looking at it is that actually they didn't exactly grow in their biggest market. In fact, sales actually declined year over year in their biggest market, which is in the US. What we are seeing, the top line number, 1% growth of sales in the Americas region, is actually largely because of Mexico. Without Mexico, I believe that they would have negative sales in the America region. Now, what is really driving growth is that you can see the China mainland. I think this is up around 20, close to 20% year over year. And then basically this area here, you can see in Hong Kong, in Taiwan, other parts of China, slight growth, also around 15, 20%, and other geographic areas, right? Singapore is one of them. Now, they are definitely facing increased competition, even in Asia. So like I'm just going to show you this brand over here. This brand is actually called Kydra. This is a very popular brand recently in Singapore. It is also one of those brands that are competing with Lululemon. So in I believe you can find this. Oh, I didn't notice this because so in Singapore there's a big shopping mall called Takashimaya down in Orchard, the central shopping area. Kydra has a store there. I can't remember whether it's at the same level as Lululemon, but I walk past Kydra pretty frequently, and they are always pretty crowded. So this is also a local. This is actually a local brand that is competing in the same space as Lululemon, at perhaps 60%, 70% of the cost of Lululemon. So that is where, if the consumer is a lot more cost conscious, these other brands are starting to take market share away from them. And I believe I heard in the US there's these two brands, Alo and let me. I heard this on the news on CNBC. One of the analysts was talking about it. If you guys are from the US, you can let me know. Alo, ALO and Viore. Now, these two brands, they say, are taking market share away from Lululemon. Oh, yes, Raymond, I agree with you. Not planning to buy. I'm waiting for the chart to stabilize myself. I'm exploring the company to see whether or not I want to make this into a bigger swing trade, or am I going to use the wheel strategy to wheel myself out of this? Yeah. I also don't like to buy when I don't like to catch falling knives. Yeah, I like to catch it once the knife has fully fallen on the floor. So for me in Singapore, Kydra is one of those local brands that are competing with Lululemon at maybe 60 to 70% of the cost. And then in America, on CNBC, I heard one of the analysts was talking about this brand Alo and Viore. I've tried to Google it. I haven't really seen these brands in Asia. So you guys if you're in the US, you can let me know whether these brands are actually real competitors to what Lululemon is doing, right? She took it back. Okay. So, I mean, you can see over here, Raymond told us that he bought some stuff from his wife from Lululemon, took back, bought 3 times more from Target. And I think for a lot of people, it is comfortable. Like I said, I'm a first time buyer of Lululemon last week. And I mean, the quality of the stuff is amazing. Is it that amazing that, okay, I'm not too sure how much is it in terms of US dollars. In Singapore, one pair of pants costs $200, which is, yeah, I justify it by saying that I'm buying it for research, but honestly, I'm not too sure whether I will keep going back to buy it again. Uh, if I can buy something for cheaper. So you can see this is a brand in Singapore, uh, and I think their colors are. You can look at the colors, the color schemes that they choose. It's a lot more neutral, and I think because of that, it appeals to people. Yeah, so I do think that this is a brand that is fairly competitive to what Lululemon is doing in Singapore, and I believe this is the same for Alo and Viore as well in the US. Now, like I said, that's in the US. I've heard it on some analysts mention it on CNBC, but I haven't seen those two brands myself, right? So the whole idea here is right now where we are at with this, they are being slow in terms of their product life cycles. They have chosen to innovate in 2024. Some of the things that they have experimented with in terms of styles that has worked, color wise hasn't worked. So that also attributed to some of the slower growth. You add on to that the uncertainty of tariffs, and then you add on to that the macro uncertainty in terms of the jobs numbers, the consumer being a little bit more price sensitive. That is why you are seeing a slowdown in the America regions. The only reason why you're seeing a growth is largely because of Mexico. Without Mexico, the America regions would actually be negative year over year. Now, most of the growth is being driven by the China region. And my wife does yoga 5 times a week. So I thought she would care. But no, yeah, I mean, I find myself exactly in the same position where, that there are people that, even my girlfriend, she uses, I mean, she likes Lululemon, but it's not that, yeah, there's no, that at least perhaps from me, I don't see that kind of same brand loyalty to perhaps some other brands out there. And I'm not too sure, is it because of the price points that people feel like, if I can get something else for 70% of the price, no point switch. It makes sense to switch, especially if you can get similar quality of clothing. So yeah, so that's something I've noticed as well. But the people who are diehard Lululemon are really diehard Lululemon. They will just keep going back. I guess it's a little bit like Apple, right? There are people like me who use Apple. I will always use Apple until the next best thing come out. I can tell you, I know, like, logically, Apple doesn't necessarily produce the best phones and best computers and things like that, but somehow or other I still like them. It's just an emotional thing. I think buy is an emotional thing. And I'm not too sure how many of that kind of emotional customers do Lululemon actually have. So that's my real concern. So that's where we find the company right now. The one thing I wanted to say is that so if you look the way the direction where I'm taking this discussion is actually the fact that I felt, okay, yes, America might be slowing down, but that's due to a lot of uncertainties that is happening in the America region right now. And To me, I've never started a position in Lululemon for the very simple reason that I never really saw that this was going to be a brand that is going to become like this big social movement. However, right now at these prices in the 160 range, I do believe that there is some upside to be had, and I'm going to explore that in the valuation later on. Like I said, first thing, this is going to be driven by growth in their international sales. Now, I think um, I'm someone who, I think if you can ask people around me, I'm one of the least Chinese you can find out there. Like my Chinese sucks. So I wouldn't say I have in-depth understanding of the Chinese culture, but I would say that I can understand it enough because I have friends from China and Taiwan and things like that. And there is this culture in China particularly, and somewhat so in Singapore as well, where there are people are very quick to catch on to certain trends that influencers set. One of the examples that I was thinking of recently is Oracle's results. So yeah, phenomenal. But okay, I mean, for me, Bitcoin miners, I didn't really get into Bitcoin miners this year. This year, I put most of my crypto allocation into the coins themselves rather than the miners. But I mean, Iron has been definitely a good play. Yeah, I think Oracle was really something that people slept on because it's been such an old company, and I think that's where uh that's where, like I said, you can really find opportunities in some of these. So the reason why I'm doing this Lululemon stream is because I have some cash puts, thinking of how to roll them out, and then along with what people have asked me previously around Nike and Ons, I thought this would be a good symmetry for the three companies together. For for China, I believe that is what is going to drive the growth for Lululemon. You can see people in China, in Taiwan, in Asia generally, pick on trends really, really quickly as long as there's some sort of celebrity influence. Now, I think what the CEO said, so this was my thesis initially, right? That perhaps China international markets are going to drive growth because they grow 25% year over year. And my argument is that, you know what, in Chinese culture, people tend to catch on trends very quickly. If you are familiar with the Labubu trend, I think that has recently gone over to the US. People in the US have started to realize Labubu. At least for me in Singapore, that trend has already started to die down. But you can see grown-ass adults fight over Labubu, which is quite stupid if you ask me. And these are the kind of things that we see. These social trends can be very explosive in nature. Now, for me, because I was thinking of this as a swing trade over the next 1 year or so. So I was looking for something to boost that revenue growth. This was one of the things I was thinking of. But I really like what the CEO mentioned over here. Let me see. Iran is not a Bitcoin miner. The Robert brothers are smart. They have used Bitcoin to bootstrap to AI HPC. They have 3 gigawatts of power until you understand it. I mean, okay, to be fair, I haven't looked too deeply into Iran because I was willing the what oh okay, I was in clean spark and riot. So after I got out, once the shares of those two companies got called away, I think early in the year, I didn't bother going back into the in that particular space. Now I know, I think that's the thesis for Iran, and that is something that retail has definitely gotten. And I think institutions have actually missed the whole thesis behind IREN. So I do think that the fundamental thesis for IREN is much different from the other Bitcoin miners. So I do understand that. I personally haven't really looked into it to give a lot of commentary about that, but this is something that is definitely interesting. But right now at $30, I mean, I don't know. Psychologically, it has already doubled. So for me, I feel it's quite hard to get in. And then my money now is mostly in Wheeling BMNR in terms of crypto. So that is my crypto play. Yeah, so you know what? I'll be very honest. I have close to, I understand Bitcoin, Ethereum, and stuff like that. With miners, I have like zero interest in them other than the fact that they were very volatile and I used it to wheel options premiums. Yeah, so because of that, because once they got called away at the start of the year, I decided to be a little bit less degen and focus on like companies like HIMS and stuff like that. And that at 544. What did I got in at? I think my clean spark was in around in the $7 range. Yeah, in the $7 range. 544 is a pretty good entry. Yeah, clean spark, Riot. These were the two that I was wheeling at the start of the year. But once they got called away, I allocated the money into HIMS and things like that. So the thesis over here, like I said, China, other parts of the world driving growth. Now, one thing and so like I was saying, so to me, as someone that is more concerned about revenue growth coming back so that the share price can recover and then I can profit on that move back up. This is, to me, I'm going to be very straightforward. This is not going to be a long-term thesis. This is a turnaround play, probably in the next 1 to 2 years. So it's a 1 to 2 year kind of swing trade. I think they can do it. There is certainly an upside from here, at least a double. And if you use options, you might get more than that. So later we'll explore that. So China international growth is going to drive that. Now, the CEO has actually been very, very candid about this. He said that while we are actually driving growth in China, he tells you that in the tier 1 cities, they are not really seeing the same level of growth. Let me see. Okay. So in that same transcript that they're talking about over here, watch BTBT, they're the next best. Okay. No, definitely. I mean, I have been, I think when, at least for me, I enjoy looking at companies to see, why they run and things like that so that we can spot similar trends in other companies. And if you say IREN can go to 146, that's still a 5x from here, right? Which means that, even now in the $20, $30 ranges, it's not too late. And, I'll definitely look into it. It's something that has sparked my interest. It is on my list, in my to watch list, but I haven't really gotten around to it because I thought they were Bitcoin miners, same as Clean, Spark, and Riot. But I've been seeing more and more posts on X, and like now you're saying it yourself that they're a lot more than that. Okay, so regarding China, this is what the CEO said, and I appreciate his candidness. So because, like I said, for me, when I went into this, I was pretty short term in how I looked at it. I said, okay, China, they have this culture where it's very driven by influencers, and then these kind of social trends can catch on pretty quickly. If they get some sort of celebrity endorsement of their brands and things like that, things will go up, right? Nike did that in the past. They had a lot of advertisements through WeChat, which is basically like WhatsApp for them, where they don't just have WhatsApp, they build in all these shopping apps on top of it. So I was hoping that, perhaps the same thing can happen with Lululemon. They can use some of these marketing strategies. However, the CEO is a lot more responsible. He's really thinking about the long term of the company. To him, even if Lululemon gets a celebrity endorsement, it will be a short-term boost in earnings. And he's more interested in that brand loyalty, in building that brand loyalty among the customers. So he's saying over here, when I look at China in Q2, revenue came in at the low end of our expectations. So despite it coming in at 24-25% year-over-year growth, that is still the low end of their expectations. And we're beginning to see some signs of macro-driven headwinds in the tier 1 cities. So tier 1 cities are your Shanghai, your Beijing, Guangzhou. These are the more modernized cities in China. Usually they are a barometer for the rest of the countries, right? So if you are seeing macro headwinds in some of these tier 1 cities, then it is likely you're going to see them in the other cities in China as well. So we have adjusted our guidance for the year to factor in this continued performance. Now, looking out to 2026, I believe the product plans discussed today will benefit our business in China, given the importance of lounge and social products in this market. And so over here, what the CEO is telling you is that, hey, China, despite it being our fastest growing products, fastest growing market at the moment. There are still headwinds. They're not actually growing as fast as we would like them to, right? However, I just want to show you that if you take a look at the CAGR for the China market, this is the China market projected growth between 2018 to 2030. Now, we are somewhere in between 2024 and 2025, and this represents 10.5% CAGR between 2023 to 2030. Right now, if the market is growing at around 10% and they're growing at 24%, it shows you that they're really taking market share in the Chinese market. And I believe that is going to be something that is going to drive their growth in the years ahead. Now, I do believe that I think for Lululemon, especially if they reach a more premium customer, they're going to be less affected by some of these slowdown that we see in the tier one cities in China as well as in the US. However, that's not to say that they will not be affected, because later on, when we take a look at the revenue, you can really see the cyclicality in their revenues, right? Okay, so I'm going to take you through okay, so the first growth driver, like I said, for Lululemon is going to be international growth, spurred on by China and basically the Asian region. And for me, I'm banking on the fact that some social trends catch on pretty quickly, and I'm seeing Lululemon being more and more, commonly adopted once again, right? That is barring the fact that I have seen some of the local competitors actually step up their marketing, and so there is increased competition from 2 to 3 years ago. But I do believe Lululemon has what it takes to compete in the market. Like I said, if this was in the $200 range, I would not in the mid 200s, where I know a lot of people started buying in the mid 200s. To me, in that range, in that price point, didn't represent too much of a margin of safety. For me now, at today's prices, perhaps it's a little bit more interesting, which is why we are looking at it. Now, the second thing that's going to drive growth is that in the spring of 2026, right, basically they had a new designer come in, and since last they were trying to build new products, innovate on new products to be launching in that period of time. So I think we are expecting to see the mix of newness increase from 23% to 35%, which means they actually have about a 50% increase in new products compared to this year, right? And I think this is something that if they really get it right, they have already told us, right? We have seen customers adopt the new styles that we have launched, not the new colors that we have launched. So if they can get the mix of colors right along with styles, then I believe this is something that is going to be able to drive revenue for them. Again, like I saying, you have to understand that all these things happen together and they are held in tension. They can release new products that customers like, but if the customer is price sensitive because of macro uncertainties, will they be buying as much as they are this year? All right. So from a casual perspective, it is about 40% of the mix. So they have about 40% casual wear, 60% performance, which is their sportswear, right? So to me, I think this is the second thing that is going to be driving growth for the company. First is China. In the short term, I think possible for them to run some marketing campaigns over there as they try and boost growth. And I think some of these marketing campaigns can be quite effective in China because some of these social trends catch on pretty quickly. First thing. Second thing, as they launch new products into the market, I do believe that they have already tested. Their styles are not the problem. It seems to be their color that is the problem. And I think I've shown you earlier on, comparing with some of the other competitors who go with more neutral colors. And I think when people who want to exercise in general, they tend to like to choose more neutral colors. And I think this is where I think when you're targeting people who are going for yoga, they might prefer different color of sportswear compared to people who are doing sports in other areas. So I think that's where the discrepancy comes in. And then the third thing that makes Lululemon pretty compelling for me is actually the valuation. So this is where I'm going to share with you the valuation that we have built. All right, so I'm going to take you through this pretty quickly. Let me zoom this in. So in terms of the business of Lululemon, what I track is actually, or what I would track is actually the total stores that are open and the net new stores. So you can see Back in January of 2021, they had 521 stores. Today, if you fast forward all the way to August of 2025, they have around 784 stores, right? So recent quarter, they added 14 new stores. Gross profit per store has been fairly consistent, around $1.9 million of gross profit per store. So you can see, which means that as they open more new stores, this number can continue to go up, right? Yeah, the overall profit can continue to grow up. And then in terms of inventory, they have around $1.7 billion of inventory on their books. Now, cost of goods. So what I've done over here is the inventory turnover ratio. So what this is it tells you how much inventory that they actually have on hand. Now, what you're going to see over here is that the trend over here is that Lululemon has been in the around mid 2 point something for the last couple of quarters. And this is actually slightly below the industry average. I believe the industry average for sportswear in terms of their inventory turnover ratio is anywhere between 3 to 3.5. You can see that at the start of 2024, they were doing all right, and then this has started to tail off towards the year, towards the end of the year, going into 2025. So what this actually is that you take 365 days a year, you divide by 2.6, which is their most recent score, and then this gets you this number 138, which means that the inventory that they have on hand can last them around 138 days. Now, why is this important? Because if you compare this back to, so this is in August of 2025, right? Their inventory can last them, Lululemon's inventory can last them 138 days. Now, if I go back just a year ago to July of 2024, and I take 365 days divided by the inventory turnover ratio of 3, you can see that their inventory over here can last them 122 days. So what this means is that there's a slower sell-through of their inventory compared to a year ago. A year ago, the amount of inventory that they have on hand would be able to clear it in 122 days. However, today, fast forward a year today, the inventory that they have on hand, they will need 138 days to clear inventory, 6 days more. So this is basically how you have to look at companies that actually stock up on inventory and to see that they have a healthy sell-through. So you can see the build-up of inventory is actually faster than the revenue growth, which is what we are seeing from their balance sheet. And then this is actually reflected in this turnover ratio, which is, for me, an important metric to track. Right. So in the past, I think I really need to go and change the inventory turnover ratio for my end phase spreadsheet, because for end phase, I actually forgot to annualize the numbers, right? So here, basically, how you find this number, this 2.6, is that basically you take the cost of goods sold over the past trailing 12 months, and then you divide it by the average of the inventory between the last 2 quarters. So that's how you get this number over here. And like I said, this is showing that they are having a slight build-up in inventory, slightly less efficiency in terms of their sales. It's not at a place where it is really concerning yet, but it is slower than industry average of around 3 to 3.5. I believe Nike is in the 3.3 range at the moment, right? So because of this, like I said, compared to some of their peers, they are definitely seeing a slowdown over here. Now, zooming in to their financial results, okay, I'm not going to go through line by line. I'm just going to show you the graph over here because I think it's easier to visualize this. You can see a definite cyclicality in terms of their revenue. There's always a spike, 3 quarters where it's a bit more flat, and then there's a spike in revenue in the 4th quarter. So this happens every time they report in February, which is basically their Q4 reporting, right? They're reporting in February. So you can see 3 quarters where it's a bit flat, and then there's a spike in revenue, 3 quarters where it's a bit flat, and then we are hoping to see a spike in revenue as well. However, what is concerning over here is that if you take a look at this orange line, this is their rate of growth. Previously, they were growing in the 20 to 30% range, and then now this has slowed down. In the most recent quarter, this has dipped below 10% to around 7% year-over-year growth. Right, a large part of this slowdown is due to the slowdown in the American region, and then I think they are hoping to reinflect this back to growth by focusing more on expansion in China as well as introducing new products. Right. However, the good thing about this company, like I said, because they are in the premium space, they're able to more or less maintain the margins, and the impact on tariffs so far hasn't seen too great a hit for them. So in terms of their gross profit margin, this has been hovering in the 50% range, high 50%, even at times going past 60%. So I think this is fairly healthy. I think right now, this quarter, let's take a look at the numbers. Let me zoom in a little bit more. In this most recent quarter, okay, you are seeing around 58.5% margin compared to a year ago. This is a decline of 1.1%, right? But still not too bad. Okay. If you consider the impact of the tariffs and all these uncertainties, 1.1% decline in gross margins is still acceptable. I would think. Okay. Uh, and then in terms of cash flow, this is a little bit more, I would say a little bit more, I guess you can see some cyclicality, 3 quarters, and then the spike over here. I'm not too sure why there's a dip in the cash flow over here in 2022, right? In 2023, you're seeing the same thing, 3 quarters where it's a little bit lower spike, 3 quarters where it's a bit lower spike. So you can see a similar trend throughout the entire business. So it is a very cyclical business, and that is something that you have to be mindful of when you make this investment. Okay, so moving on from here, I'm going to take you through the discounted cash flow. So basically, the assumption over here is that in 2025, this is I'm just using their trailing 12 months revenue to assume their 2025 numbers. So even then, it is around a 13% year-over-year growth. Now from here, they have to put up 15% year-over-year growth to get $12.5 billion. Now, why am I using percent is a terrible Treasury Secretary, tariff effects yet to take effect. And I think that is definitely the things that a lot of consumers on the ground in the US are concerned about. I have friends in the US that are Democrats. I have friends in the US that are Republicans. And then you really get one group that are like pro-tariffs and they really believe that it's fine. You get another group that are afraid. And I think because of that, you're seeing a lot of uncertainty. But I think even some of my friends who are I would consider them moderate Republicans, they are also going to feel the impact of some of these tariffs and they are hoping that growth actually comes. Again, like I said, I'm from Singapore. I have no stake in this. I don't want to talk about something that I really don't have much knowledge over. I just know that as an investor, this is something that is going to drive uncertainty for the companies I invest in. And then I just have to price that in, right? Okay, so that's how I see it. And I don't know how this tariff thing will play out because I'm not old enough to be alive. I only have read about how tariffs have impacted the economy, and I don't think tariffs are good for the economy. I mean, that's my opinion. I don't think tariffs are good for the economy. Yeah, based on the facts that I have read in the past. However, the administration can say whatever it wants, and I'm not in a place to comment whether or not it's because it honestly doesn't affect, right? Yeah, but I know people in the US who are complaining. My friend works at LAX, and basically he's telling me that people have to take on jobs outside of their jobs at the airport. So basically, he works in Singapore Airlines, and then he goes over to help out to train some of the staff in LAX. And when he's talking to people on the ground in LA, they're telling him that apart from their 9 to 5, they have to take on a second or even third job just to make ends meet. And I don't think that is I don't think that is something that anybody wants to see. So, and if like what Raymond is saying is true, some of the impacts of the tariffs are yet to take effect, then you can see why the consumer is starting to pull back. And if that is the case, perhaps Lululemon may not be the best investment, and that's why you need to position size your portfolio accordingly. Okay, so to me, why I'm holding them to $12.5 billion in 2026 is because this number was not given by me. This number was given by Lululemon itself back in 2022. Okay, back in 2022, Lululemon actually, let me see. Give me a minute. I lost my... Oh, over here. Okay, so you can see back in April of 2022, Lululemon announces 5-year growth plan to double revenue by 2026 to 12.5 billion. So right now, on a trailing 12 months basis, they're at around $10.9 billion. If they maintain flat revenue growth throughout the year, they have to grow by around 13 to 15%. I listen to Goldman Sachs, not percent. I mean, I have to agree with that I think sometimes with some of the people that are speaking on the media, I find it a little bit hard to know their real agenda. Are they trying to, really give you the most accurate interpretation of the data? Or are they trying to, have some other agenda that I'm not very sure? So, like I said, I think for the US going into a midterms in 2026, that's going to be quite telling in terms of how the administration is going to act, and hopefully they are less aggressive than they have been this year. Yeah, because I really don't think, I mean, honestly, if you look at the numbers, not saying, like I said, complete outsider looking in from the outside, just saying that I feel like the US are pissing a lot of people off. Sentiment towards the US, at least in Singapore, is really pretty low. And how I know that is because people, they do this travel survey every year, and the US has fallen down the ranks so horribly over the last year or so. Yeah. So because of that, I mean, I personally big fan of the US, but I can see sentiment in the region, in the Asian region especially, shifting away from the US. And I think, yeah, kind of worried that, if this continues, this is not being stopped, this people tolerate, in the end, at the end of the day, the feeling I get now from people who, I know people who run shipping businesses and things like that. The sentiment that I am feeling is that, people are tolerating the US at the moment. They're just waiting for some change in administration and things like that, for things better. And for now, they're just tolerating them. And I think that's quite sad to say, because big fan of the US, big fan of all the innovation coming out from the US. I am still very hopeful about the US. I am trained America, because I do think that the biggest companies are there, capital is there. It's going to take quite a big screw up really to mess all of that up. And despite how fast China is innovating, a lot of that has to do with they copy and then they tweak. They copy and then they tweak. But I do think if some sort of sanity can be restored by the midterms, then I'm not too worried. But I am expecting a more volatile 2026. That's all I'm going to say about that. So this is because anyway, so back to Lululemon, because of this particular statement back in 2022, that is why I'm holding the company to $12.5 billion in revenue by 2026. Right, you know what? This whole percent thing, yeah, I mean, I've heard a lot of people tell me stories that he's not as successful as it's made out to be. I haven't really looked into it. You're not the first one who tell me that, but yeah, if that's really the case, then I can understand I can understand where some of these concerns are coming from. I would say maybe, yeah, at least for me in Singapore, our politics is, fairly mild. You guys have a two party kind of country. For us at the moment, technically we have two, but the second party is not that dominant. So it's still a one party kind of democracy over here for now, right? Okay, so that is Lululemon's. That's how I got this $12.5 billion estimation. From there, I'm expecting revenue to tail off 12%, 10%, and then eventually ending out the decade at around 7%, which is basically where they are today. Then in terms of their cash flow margins, they've been doing between 24 to 26%. I'm just taking a midpoint, 25%, and projecting out for the whole decade. I don't think that they'll increase in terms of their cash flow margins. CapEx over here, it's been, I think if you average this is around 7%. In the most recent, on the trailing 12 months, they have spent a little bit more on capex, but generally that is out of trend. Generally is around 7%. So that's what I'm using. And then in terms of okay, so they cash on hand, we already saw that they have around $1.15 billion cash on hand with no debt, shares outstanding. This is basically taken directly from the data that Microsoft gives to us. And then with a WACC of around 9.2%, right, you end up getting, oh, sorry, wait, I forgot to cover the multiple. EBITDA margins, let us go back to fiscal AI. So if you go into fiscal AI, you just look at their EBITDA margins. Okay, so you can see Lululemon generally has been operating at around mid 20% range in terms of EBITDA margins. I think recently they have tried to ramp up on profitability largely because to make up for the slower revenue growth. I believe if they inflect back to growth, that yeah, we will see a margin basically even in the mid 20% range, and that is not something to be concerned about. That is actually something yeah, is to be expected if you are going into this investment. And then if you look at it in terms of the ratios, let me add the EV to EBITDA. You can see this blue line is the EV to EBITDA. Generally, I would say if you draw a midpoint, you will get around 16, right? 16 times EV to EBITDA. Currently, right now, they are trading at around 5.7 times. So just on multiple expansion alone, there is a possible 3x from here. I would say a 3x is quite unlikely because you can't just go on the multiple and make an assumption that they can potentially 3x from here. It's very easy to say that. Yeah, I think if you consider the macro factors, if you consider that China being their growth driver is seeing some macro headwinds and they are not out in China trying to boost sales by some marketing gimmick. They really want to build brand loyalty among customers. Then I'm going to, to expect maybe an EV to EBITDA somewhere in the 10 to 12 times range would be a little bit more reasonable, which is exactly what I've done in my valuation. Okay, so with this, we go back to valuation. You can see over here, EV to EBITDA, 25% margin, and then 12 times EV to EBITDA, you get a share price of around $457. Now, if you aggregate these two share prices together, what you end up getting is a implied price of around $420. Now, for me, I am taking a huge margin of safety over here, a 20% margin of safety, because I am not someone that typically invests in a retail company. I think there's inherent risk because of the cyclical nature of the business. The management has told us it's going to be a big growth, but at the same time, they are seeing headwinds in China. So that means, I'm actually expecting growth in that region to slow down for a while before it reinflects back up. So to me over here, 20% margin of safety seems fair. So why I've been looking at this is that because I have cash put sold on this. I mean, I did it quite aggressively. I didn't think that their earnings would be as bad as they are. So let me just bring you into my portfolio so that you can take a look, and then we can talk about it from here. So what you are seeing over here, my Lululemon position, this one over here, you can see I have 190 strikes expiring 19th September 25, which is Friday. And basically, I have received $8.64 in premium, which would put my cost basis close to $181. So from here, what I hope to do is one of two things, or I am deciding to do one of two things. I'm definitely going to get a sign unless something happens in the next 1 week, which is fairly unlikely. I could just take the assignment at whatever price it is, 150, 160, and then try to sell covered calls in the 170 range and roll it up as the company actually gets as the company recovers, right? Just on the technical level, I believe there's a gap to fill. So if I'm just looking to exit this trade, which I am actually, I'll be very frank, if I can exit this trade within the next 1 to 2 months, I'm definitely going to do it. Move that 19,000 to other some of my other investments. But for me, I wouldn't mind holding this for the next 1 to 2 years, especially if especially if I, yeah, I'll explain it later on. Especially if I can use options. So for me, one option over here, or one possibility is that I take assignment, right, at 190, while the price is at 160. I sell covered calls in the 170 range, which is quite aggressive because it's going to be below my cost average, and I don't suggest people doing that if they are new to the wheel strategy. But I'm going to do that, and I think if you use a covered call strategy, I would usually suggest you sell your covered call higher than your cost basis, so that you know that even if it gets assigned, you're not being assigned at a loss, right? But for me, because I've done this a while, I'm comfortable selling it at a more aggressive price and then just rolling it accordingly. Okay, so and honestly, the way I think about it, it's only 100 shares. And my cost basis is $181. If it gets called away from me accidentally at 175 while I'm on holiday, would I lose sleep over $600? No, I would just take the money and do something else with it. That's how I think about it. Thankfully, it is a very small position. Another alternative is over here. I'm not too sure if you guys use this really frequently. So if you go to options profit calculator, because previously I never thought of buying leaps for Lululemon, because the first I could go January of 2027. Now, I would say that in January of 2027, I'm still not so convinced of their recovery. I have been taught a lesson previously by companies like PayPal. So the way I look at it, I more than doubled my leaps. You can see over here in terms of my United Health play. And this was really something I learned after losing around $30,000 investing in PayPal leaps. So United Health, you can see I got in at around $20. I actually sold half of this position. It started off with 20 contracts at $20.50. Currently, it's at $55.80. Lulu gets talked about so much on CNBC. Oh, it does? I didn't know that. I think recently the CEO is really trying to get out there more to actually speak to investors. But I didn't know that they have a lot of coverage. At least in Singapore, I don't really hear people much about it. Yeah, I mean, in terms from an investment perspective. So for me, I put Lululemon into the PayPal category more than the United Health category. What I didn't notice with PayPal is that there was a structural problem within the company that would take years for the turnaround to happen. And the leaps that I bought on PayPal were just, I think, 6 to 9 months out. So because of that, I didn't give PayPal enough time to recover. Eventually, PayPal got to the $90, which I needed it to get to, but it got to that $90 6 months after my leads expired. However, and so with United Health, two things I realized that I did that were different is that I went out so far away that I knew I had enough time. So $400, 17th of December 2027 for United Health. I got them at $20 back when UNH was trading in $250 ranges. And you can see it has paid off today, so I'm thankful for that. But the thing about UNH that is different from PayPal is that UNH didn't really have a structural problem. Theirs was more of a problem with regulation and policy. And I think just insurance companies in general underestimating the morbidity rate in the ACA. So they can make a very simple tweak by changing the premiums and everything will be fine. And so because of that, I felt a lot more comfortable using options on something that I know can be, turned around pretty quickly. Yeah, so because of that, UNH, yeah. So Raymond, for a lot of these companies that I'm talking about, Lululemon, UNH, it's just a small portion of the portfolio, because as you can see, sometimes I like to take these kind of positions in turnaround companies, and I use options to actually amplify the returns. It's not because I think that they make good long-term holdings. So Clover, I know you mentioned that previously, and then basically once I'm back from holiday, it's something I'm definitely going to look into to compare that with Oscar as well. So yes, I do have Clover Health on my watch list, because I think you mentioned it previously when I was doing our Life MD, right? Was it you? I believe it was you or someone else. This is not, a couple of people have already asked me. Yeah. So I believe UNH to me is a turnaround play. And anything that you can see I use a lead on is without any stock position is generally a turnaround play that I'm using options to amplify the gains, which is exactly what I'm hoping to do with Lululemon. Yeah. So I'm talking about it not because I think it's a fantastic investment. I'm just, documenting my thought process so that I know why I have chosen to invest in this company. So if I use the option calculator from here, yeah, I remember you were done when doing the live MD stream. You are, and since then I've looked into it a little bit. It's quite interesting. So I'm on holiday next week, unfortunately. I'll be in Canada and Alaska for about 17 days. I will still be live streaming, perhaps not every day. I have already some videos planned, but yeah, I will definitely still be live streaming when I'm there. At least I'm in your guys' time zone. So what is interesting for me is if I can now go out to 17th December, and very conservatively, you can just go for the 220 options, which is around $32. And if you, okay, I always like to, oh, oh, 220. So I basically 200 to 350. Sorry. And so you can see over here. Now, Lululemon all-time highs. What was Lululemon? So when I use options, I think you have to understand that part of it has to do with understanding how the chart moves. And I'm just hoping for a reversion to the mean. Now, I don't even need them to go back to all-time highs at $515. Why I'm using 350 is because I believe that is where, yeah, I think that is where it will kind of meet the 50-day moving average and the 200-day moving average. So if you assume it gets there, basically sort of like a double from here, actually the option chains don't look that fantastic to me on second thoughts. I guess for a pretty short-term trade, if you think Lululemon gets back to $20 from here, $200 from here, yeah. Let's see. All right, let's say Lululemon gets to $250 by when is this? September of next year. You're looking at 100% return. So yeah, okay, double in a year. If they get back to 250, and if I consider the fact that they're launching their products in spring, not too sure whether or not. I don't know. I think I'm more inclined to. I don't see much upside compared to UNH, because with UNH I knew that it was a regulation problem. It was a problem of the entire industry mispricing the ACA and and some of the mobility rates over there and things like that. So because of that, I was pretty certain in how they can tweak it around, and I have experience in the finance space to know that they can tweak this around. Lululemon, I'm a little bit less confident. So initially, I was thinking perhaps I could take out a lead position on. Yeah, but now looking at this, it doesn't look that appealing to me. I mean, I can see it getting to 250 by September of next year, but if my return is only going to be 110 to 105%, it's not worth the risk, right? Because from today at 160, that's a 60-70% return. So I'm basically getting an extra 30%. Not that compelling to me. I think this is something I think I'll be doing from here is that I'm going to take the assignment, sell a covered call, and then basically just roll out of that position eventually. Clover, biggest position, SoFi number 2, Iran number 3, Google 4, Amazon 5. Okay, well, at least we have 3 out of 5 positions that are the same. SoFi number 1, Kim's number 2 for me, and then Oscar is number 3, right? But then I have Google as well in my other account, and Amazon. I think, no, wait, sorry. I don't have Amazon anymore. Sold off Amazon previously and consolidated everything into Google in the 150 to 160 range. So I have no Amazon anymore. Used to. Yeah. I understand Iran. I have to say I never really looked into Clover, so I don't know much about it. But yeah, I will definitely be looking into Clover once, at least when I'm on holiday, perhaps make a video on it when I'm back. Yep. So with that, very quickly, I'm just going to take Lululemon through our framework and then we'll call it a day because I have to leave in 10 minutes. You want to know something? You guys know why I never actually invested in Amazon? For all the good things that people say about Amazon, you know who actually outcompetes Amazon over here in Singapore? Shopee, which belongs to C Limited. I honestly tell you, as a foreign, the amount of times I have used Amazon, honestly, is to order stuff. Okay, I don't know how many. I'm pretty sure all of us watch more or less the same kind of content. And if you have watched Tanner's content, you would have heard, Amit's content, you would have heard Steve talk about his alternative investments. And I have the same alternative investment as Steve, Pokemon cards. And the main reason why I use Amazon is that because there are certain kind of protectors and binders that you can only get on Amazon. And that's the only time I find myself using Amazon. Majority of the time, I'm actually using C Limited, which is Shopee, right? Sorry to mess up. No problem at all. I think, like I said, to me, part of this, some people have asked about it. For me, I have a vested interest with options are under. I wanted what I want to do with this position. I think I have decided that I am going to just roll this position out eventually. Yeah. I want you to spend your time on good companies. I mean, I want to spend my time on good companies, and I believe that the arbitrage that retail investors have is that we have this communities that we create across different channels that actually brings us these kind of different opportunities that Wall Street and basically some of the bigger investors might miss. So I'm all for that. No worries. Okay, let me very quickly take Lululemon through this. Like I said, I like what I see in terms of China growth for Lululemon. I like what I see in terms of they wanting to launch new products, but bear in mind they have launched new products before and they necessarily hit it out of the park with the new product launches. So it's not given that because they launch new products, they are going to do well and definitely recover, which is why I'm not certain on the options plays. 170 vet. Oh, you mean covered 170 calls, as in you bought these calls expiring. Okay. I mean, if you that's a month. I don't know whether or not. Yeah, I don't know whether or not 170. I'm so sorry, but this is a weird thing to say because I'm in Singapore. When I see 10.3, I'm thinking 10th of March. But I presuming you're from America, so 10.3, do you mean October 3rd or 10th of March? Stupid question to ask. I'm so sorry, but I just wanted to clarify because if you're asking me about October 3rd, I really don't know. Hopefully, it can get past 170. 10th of March, I'm a little bit more certain, which is next year, October 3rd, right? See, I'm not even back from my holiday. So I think I'm really hoping that it gets past 170. Yeah. I think there are a lot of people, especially on YouTube and X, who are the more, I would consider them value-based accounts. Everybody in that area of pin tweet is talking about them. So hopefully you can see that. I mean, they were nearly there, and then basically they fell back over the last couple of days. But I think this is only normal. Or give it a couple of days, you still got about 3 weeks left. Okay, so Lululemon, you can see market cap 19 billion, PE 11. This is a large cap company, right? So like I said, yes, in yesterday's night's video, this automatically calculates for you total addressable market over here. Now, their total addressable market was around sportswear total addressable market. Okay, so for Lululemon, the total addressable market is slightly different. Right now, the global sportswear market is around, let me see, what did I find for Nike? $350 billion in 2023, growing to $617 billion in 2032, which is a 6.2% CAGR. Their fastest growing market, which is in China, which we looked at earlier, is only growing at 10% CAGR. So the market itself for sportswear, in terms of the growth of the TAM, is not big. In terms of Lululemon's revenue, definitely the TAM in front of them is more than 10x of their revenue. So that's why they are getting full marks over here for the TAM. But in terms of CAGR, I would say that take away point from them because this is in a slower growing space. They haven't shown the ability to innovate in the space. I think if they show the ability to innovate in the space, which was what they have done previously, I'll be a little bit more inclined to give them a higher score. But I think other than that, you have to consider the fact of where they are now, not what they have done previously when you do all these valuations. Revenue growth more than 5% above TAM. Oh, wow. Okay, in terms of China, yes. In terms of global market, actually, no. Because they actually grew their overall revenue by 7%. Global sportswear market is growing at 6%. So because of this, I am taking off a point. Oh, wow. It goes to 0. Okay. Right, because they are growing fast in the China market, but the China market is a portion of revenues. At the moment, it's only around 25-30% of their revenue. So I can't really give it to them. Global sportswear market growing at 6.2% CAGR. They're growing at 7%. So you can see the option over here is plus minus 2% of TAM. Yeah, sorry. Business model, easy. Okay, switching costs. There is honestly no switching costs. Right, you can just go to any other brand. Network effects. I would say if you consider the fact that they work through they can work through influencer marketing, you can say there's a little bit of network effects, not much. Low cost advantage, not relevant. Economies of scale, they do have that. They are big. Vertical integration, not that I know of. Capital and scale. So, okay, I mean, I guess you have to give them credit. They have over 700 stores. They have grown their stores by 50% over the last couple of years. Okay. Let's give them some marks for that. Regulatory framework, this is not relevant. I think tariffs are an impact on them, But by and large, there's no regulatory framework that they don't have any licenses that is going to become a moat for them. Intangible, I think this is Lululemon's brand, definitely something that you have to give them credit for. I'm not missing anything, right? There's no way that Lululemon is vertically integrated. Okay. Revenue trend over the last couple of years. What has been their CAGR over the last couple of years? Let me take a look. Lululemon, if I take a look at the CAGR. Okay, their 3 years revenue CAGR has been in the mid-teens. Okay, that isn't too impressive. So in the mid-teens, you're around here. They have more than one revenue stream because women's, men's, and then lounge, right? No customer more than 10%, stable gross margins above industry. You have to give them full marks for that. And then their operating expenses, they have been increasingly tightening their belt so that they are a lot more profitable. And I think that they're focusing on that because they haven't been able to put up the revenue growth. Now, cash on hand, 1155.6. Long-term debt, they had 0. So, okay, just for the sake of this, I need to put a very small number because this is going to be a ratio, right? So, well capitalized. Goodwill, let me their balance sheet. Take a look at the goodwill that they have on their balance sheet. Goodwill. Oh no, I'm a bit late. Let's finish this. Okay, my hard stop is at 11:10. Where is goodwill? Oh my goodness. Okay, found it. Goodwill on the balance sheet, 172 million. Intangible assets, 903. Okay, so goodwill and intangible, 172.9 million plus 9.3. Oops. Okay, shareholders' common equity. Shareholders' equity, where is it? It's over here. $3.148 billion. Am I right? Yeah, 3.148 billion. Okay, 3.148 billion. So goodwill to equity ratio, perfectly fine, right? Perfectly normal amount of goodwill, not too bad. Operating cash flow. Okay, let's take a look. Fiscal AI. And let's take a look. Let's uncheck all of this. Operating cash flow. And then free cash flow as well. Okay. So let's take a look first. Let's hide this. Free cash flow. Okay. So operating cash flow. Okay. I mean, generally is a pretty standard uptrend. You can see cyclicality there, but it's still in an uptrend. I think free cash flow is where you see a little bit more volatility there. And I think that has to do with the way that they expand as they open more new stores. They generally spend more capex. Because of that, you can see a little bit of volatility in terms of their free cash flow. Okay, sure. I'm not too fussed about that. Let me go to. All right. So if we go back to the framework over here, okay. So what I would say is that for operating free cash flow, positive and growing, I wouldn't penalize them for cyclicality because that is just the nature of their business. But what I would say is that their free cash flow margin, it's improving. but it is cyclical because I think it does really is highly dependent on the capex that they spend to open up new stores. That is not to say that we do not want them to open up new stores, but it is just a feature of their business, right? So because of that, you have to price that in, because although as an investor it might not bother you, but you have to understand that there are investors out there that may sell off the company because of the fluctuations in free cash flow. So that is something that you have to price it in as well. Okay, so net income, tangible equity. Okay, everything is calculated for you. Anyway, this I don't need this for what am I talking about? I don't need this for non-bankings. Is Kelvin McDonald original founder? No, original founder was Chip Wilson. Okay. When did Kelvin McDonald, sorry, become CEO of Lululemon? 20th August 2018. So, he joined from Sephora. Right. I remember I remember talking about it recently. Okay, he joined from Sephora. So he has experience. You know what? I'm going to take away a point for this. He joins from Sephora, experience. Yes, good track record in Sephora. Still unproven in Lululemon because he has tried to change some of the style, things like that. And I think he himself admit it hasn't really hit. Right. So let's see how he. There's definitely share buybacks going on. Insider ownership is fine. Okay. Reducing debt, low to no risk. Exit unprofitable segments, low to no risk. Diversifying suppliers. They are definitely in the midst. I think they are definitely hit by tariffs. I think they are definitely going to have to diversify their supply chains. Simplify operations, no risk. Liquidity, no risk. Macro and regulatory risk. They are proactive risk management. Like I said, I think this is part of. I think I would say the macro risk over here also involves China, right? Where there's slowdown in the China market, and then that's why they're introducing new products to try and entice people. They're trying to build brand loyalty over hype by marketing through some influencer, which is really something I respect them for. Operational risk at low to no risk. Would you consider the failure of? You know what? I'm going to say that they're working on it because they launched new products in 2024, but not everything hit. So I am going to, because you see, then the note over here is that this is to penalize management for their missteps and possible supply chain issues. So for this, it is a misstep from management. Core business gains during market share downturn. I think survives. 10 plus years. Okay, yes, 10 plus years, multiple economic cycles. I mean, they have shown. Okay, so with this, let's go up. What is Lululemon? Okay, 2.45, story driven. Basically right smack in the mid-end of story driven. And this is exactly, I think, if you look at the company where we are talking about them today, there are this is exactly what the kind of company we're talking about. If you consider what we said from the start, if you have to understand Lululemon as a company, you have to understand the context of the US, which is that there are a lot of job revisions downwards. And then because of that, we are starting to see, perhaps the US economy is not as strong. The US consumer is not as strong as we thought initially. Now, because of that, there is going to be some slowdown in spending. Consumers are going to become more price conscious. The only good thing over here is that Lululemon markets to the high-end customer, the high-end consumer. These consumers generally tend to be less impacted by any downturn in the economy. Will they keep up the same pace of buying? That is a completely different issue. There will be a slowdown, but they may not see as big a slowdown compared to other companies. And so where you are actually seeing this play out is really in their gross margins. Lululemon's gross margins are still fairly high compared to competitors in their industry. And personally, for me, if you are entering into this position, there are three things that are pretty compelling reasons. Now, the first one being the growth in China. China is growing fairly fast. However, the management told us things to be aware of. They are not going to grow in China just by launching some sort of marketing gimmick, because to understand the Chinese culture, you have to understand that these kind of influencer marketing is very, very effective. People follow some of these influencers very, very closely, and social trends are developed quite quickly. However, that is not the strategy that Lululemon wants to adopt. because they want to build long-term brand loyalty and brand awareness. And I think I really respect them for that. And if you're a long-term investor in that company, that is something you have to appreciate, right? If you're like me, someone who is looking for a quick trade over the next 1 year or so, then that may not be something that is super applicable to you. Now, the second thing about China is that in the tier 1 cities, they already told us that they're seeing some sort of macro headwinds, so to expect perhaps a little bit of a slowdown. Now, with that coming into the back half of the year, will Lululemon then inflect to even lower growth than 7%? Perhaps, right, which is why they have low guidance. So it really remains to be seen how they continue to perform for 2025. Like I said, for me, because I have a cash to put position, that's going to be assigned to me in a couple of days' time. So I need to understand this company, where it stands, and what I want to do with the position. But for you who may not have a position you're considering, I personally think there might be better opportunities out there. But if you really, really like to own Lululemon because you love their products, then, like I said, let's wait for the price action to steady out before you consider a position. Second thing that is a compelling reason if you are interested in Lululemon is basically their product innovation. They are planning to increase the new launches in spring of 2026. Previously, they have launched their new product cadence at around 23%. So in 2024, 23% of the products that they launch are new. In 2026, they're going to up this to 35%, and they're hoping to get that balance correct. The reason is because one of the reasons that has caused a slowdown in their revenue so far has to do with the fact that their product cycle has been too long. A lot of their products, their designs have grown stale. And the new products that they have launched, the styles that they have launched are a hit with the customers, but the colors not so much. And because of that, the styles that are being adopted by the customers is being offset by the slower growth of some of the color schemes that they have chosen for their products. So you can see some sort of missteps over here, which is why in our valuation process, we actually accounted for that and we took some point off the missteps for the company. Now, the third thing that makes it compelling, like I said, is the valuation. Even giving it a 20% margin of safety, there is still at least 100% upside. From here, it seems. Now, is this worth the risk of 100% upside? I think everybody has to answer that question for themselves. For me, if I didn't have this cash secured put position, I wouldn't be inclined to open a position. That is my honest answer. I think that if you're just looking for 100% upside, a lot more bets to do that. Out there are a lot more compelling companies to do that out there at today's valuation. Now, I know the market valuations are fairly high right now, but I do think that there are opportunities in certain sectors of the market. And so I think with that, for me, my my decision at the end of the day is that, this is a okay company, nothing fantastic, but it is a company that I don't mind owning for a short period of time. I'm going to get assigned the shares at 190, and although they are in 160s today, I'm not worried because they are shares, they're not options. I'm not going to buy any leaps on this position. I'm going to sell very, very aggressive covered calls in the 170 regions. If it gets called away when I'm on holiday and I don't notice it and I lose $500 to $600, so be it. Otherwise, I believe within 1 to 2 months, I can roll out of this position profitably and reassign this. I also have to say, I am more than willing to take a loss on this position if I need to free up the capital to buy others, if we do see more volatility coming towards the end of September. Right, so I think that is where my head is at the moment, and this is basically what I think about Lululemon. I like the long-term prospects of the company. It is not a company that I'm interested in because, like I said, best case, a double, triple from here, but then I can find other more compelling cases that after the double or triple, there is still a longer term trajectory to play out. But for Lululemon, after the double or triple, because of these recent fluctuations, what then? What is the next frontier for Lululemon that is going to excite me? And I can't answer that question right now because it is, after all, an apparel company. It is in the retail space. So like I said, this is more of a swing trade for me. If you're looking for more long-term positions, if you're just looking for a double and triple, there are so many other opportunities out there in the stock market. Beyond that, beyond the double or triple, if it goes back to $300, $400, after that, what am I going to be excited about? Honestly, not much. I think there are a lot more compelling opportunities out there after the double or triple that you can get into today at fairly decent valuations. I wouldn't say as low as they were last year, but fairly decent. If you're looking at it purely from a valuation perspective, then of course I understand why you are in Lululemon. But At least that is how I'm looking at this. Now, I really got to run. It's 11:11. I'm already late for my next appointment, and I will see you in the next one tomorrow night. I'll be leaving. I'll be leaving an update before I go live. All right. Thanks for joining me this morning, and I will really see you in the next one.